Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll talk about something called a Fibonacci retracement level. The thing about Fibonacci is there's a lot of questions about whether or not it's a real thing in trading. What Fibonacci would be a mathematical kind of discovery that was made in the 12th century that there are certain ratios that repeat time and time again in nature. The ratios are, they can be used in a multitude of different ways, but it comes down to like the curvature of mountains, crops, the way that they will grow. I've even seen it applied to like the reproduction of rabbits, bends, and rivers. So if this was a river, there would be percentages and to come into the picture. Now, the thing about this is it's a pretty deep subject, so you can certainly do your own research on the Fibonacci sequence if you wish to. But suffice to say, it has made its way into trading. So there is a Fibonacci tool that comes on TradingView, Fib Retracement. So basically what you're doing is you're looking for a swing high and a swing low, and you click on a spot and you drag, and then you click it to the next spot. Now, the first thing that I will tell you is the style. When you click on the style here, there's a bunch of other Fibonacci ratios that you can use. Most people pay attention to 38.2% or 0.382, 61.8, and 50, and then 0, which is one extreme, and 1, which be a complete retrace of a move. The golden ratio is 61.8%. That's something you see time and time again in nature, and that's really the heart of it. So you can click and have more come on. You can see it just started, or like, 23% from the move. But at the end of the day, these are the ones that are most widely followed. So, most traders are going to pay attention to it. So in other words, if you start a move here and you go all the way up to here, so that's, a swing low to a swing high, 50% of that is right here. Interestingly enough, 50% is not actually a Fibonacci sequence number. It goes back to the old Wall Street days. But so many people use it, they just put it in the tool itself. So the first thing you do is you identify a swing high. And let's say, the market had been falling for some time. And, here in Bitcoin, you really wanted to see, an opportunity to short because it obviously had gotten very bearish. Well, once it's made this move, Fibonacci can give you an idea of where sellers might jump in. And the 38.2% level was exactly where they started to sell it off again. It does work in both directions. So, for example, if you saw this move here and you said, you know what, I want to get involved, right here, 50% of the move has been retraced and they got involved. So here's the rub. While you can say, look how great 50% worked, you can also say that's a resistance barrier that's now seeing support. Remember the market memory. What becomes what was once resistance becomes support, and vice versa. So most of the time, the best use of Fibonacci is going to be in conjunction with support or resistance. Most of the time, you'll find the ones that work do kind of put everything together like that. So here's an extension. So you notice the thing changes a little bit there. And now what an extension does is it tells you where the markets may go. So this was a move, this was a pullback, and if we start to take off again, you will see, excuse me, you put it back there. You will see that's the move. It pulled back, and then you can see this is the area here. So Let me go ahead and do another one. We'll take this downward move here. So that's the big move there. So the question is, if you don't get in on the retracement, which there was a retracement there, where could it go? Well, it could go down to this level. Could even go way down to this level, but it never made it. And you'll find the further out the extension, this is 1.61. So in other words, it's 61.8% of the move extended. What you'll find is the further you go down the extension ladder, the less likely it is to hit. The reality is fib extensions aren't really used that much, but they are, you will see them from time to time. So that's why they're worth mentioning. So let's go ahead and take a look at another random chart. Let's just pull up Ethereum. Let's pull up a 15-minute chart. So it's a scalping course after all. Let's pull up a fib retracement. And when you hear traders talk about Fibonacci, it's worth noting that probably 98% of the time they're talking about retracement. So big move here. You're looking to get involved right here at the 50% level, an area that has been rather noisy in the past. You see a turnaround. Market tested the area twice and then took off. So that's, that's a pretty standard way to trade this. You can even, so although I did take this out earlier, so on this move here, you say, well, it didn't go back. Well, I mean, maybe it did. Maybe it went back to the 23.6. Again, 23.6 is not one of the major levels. And that's part of the problem with fibs, because you watch what I just did. I made it fit. So you have to be cautious about trying to make Fibonacci fit to your narrative, as it were. It should be thought of as a secondary tool. Support and resistance first, Fibonacci's next. So in this next video, we'll take a look at how to scalp using this. I'll show you some examples on 3 different charts, and we'll just kind of take it from there.